Welcome back, everyone. My name is Doug Burson. There has been a flood of new information the last few weeks that affects forgiveness of the PPP loan program. So how does that impact you, and will it be for the better? Well, as I just said, my name is Doug Burson, and I'm a CPA who focuses on small businesses just like yours. And I'm sure if you're watching this video, you have concerns on the PPP loan forgiveness and how you can make sure you take full advantage. So stay tuned, and we're going to cover that right now. And if you're finding value in the videos that we've provided for you so far, go ahead and subscribe. We're going to be giving you more as things become clearer and clearer. I'm going to try to give you tricks and tips to help you make sure that you take full advantage of the program. And after you subscribe, go ahead and leave a comment below. If you find that this is going to help your business, or if you're just finding all this to be completely overwhelming, that's okay too. Share that. You're not the only one. But let's go ahead and get started, because there really is a lot of good news, and there's more to be coming. So go ahead and subscribe, like I said, and stay tuned. But today we're going to focus on the changes and clarifications that have really happened over just the last week or so. So if you haven't watched our video from a week ago that covered the act that just passed, you might want to watch that as soon as this is over, because it's going to really help you with a lot more of the details. But today, just to take care of your time, for those of you who've already seen that, let's focus on what's changed, and it's really some big stuff. So first of all, you remember last week we talked about the 60% cliff. Remember, we did have to pay 75% in payroll, but the act that they just passed said, no, you're only going to have to do 60%, but you have to spend all the way up to 60% or you're going to fail forgiveness. Well, they fixed that. The cliff is gone. So if you spend 55%, you're only going to lose 5% forgiveness. You're still going to get the full 55, which when you go through the rest of this here with me, I think you're going to find that's not going to be a factor for most of you anyway. But if it is an issue, don't lose sleep over it. It's going to be okay. You're only going to lose the amount that you weren't able to use. And if that's the case, that's fine. You can go ahead and give it back. But they also changed from 8 weeks to 24 weeks. And that date starts from the date of disbursement, just like it always had. But what's a really big thing here that I think anyway is the Schedule C guys. I have a lot of questions from Schedule C guys that are going, everything says payroll. Well, they've now addressed that, at least to a certain part, and said the Schedule C guy is going to be okay, and that's a big relief for a lot of you. So let's take a look at what that looks like. So what they've said is over 8 weeks, remember we had the 8-week period, and then they moved that to 24 weeks, and we covered that last week. But the 8-week period, the maximum that you could take is $15,385. Or they've now switched because of the 24-week, and this is a big change. We can now have up to $46,154 per employee is the maximum. So 100,000 divided by 52 times 24. So 24 weeks is $46,154. So that is going to be huge for those of you who have employees. However, what if you're the Schedule C, like I said a minute ago, or a Schedule F? Maybe you have a farm, same concept here. Well, in that case, the maximum is, for if you're under the 8-week program, is 8/52 of your 2019 net profit, up to a maximum of $15,385. But they've now decided that if you're a sole prop, you can now take up to 12-week max. So in other words, take 2.5 twelfths, and we'll go over that in a minute, 2.5 twelfths of 2019 net profit up to a maximum of $20,833. So we just got some more relief there. So let's take a simple example here. Example is, let's say your Schedule C, the net profit for last year, 2019's tax return, the net profit was $50,000. So remember, when we applied for the loan, we took that $50,000, we divided it by 12, and we multiplied times 2.5. So $50,000 with that calculation works out to $10,416.67. Now, if you got your loan before the update. I believe it was June 5th, but and I gotta go ahead and step back right now. Everything I say in this video is based on the way I understand it today. I mean, things are changing all the time, so I just want you to make sure you're unaware. This is as of today. Stay tuned. Laws change, our understanding changes, but this is pretty good information as of today. So we take that 8 weeks is 50,000 divided by 52 times 8 gave a maximum forgiveness of $7,692.31. So I wanted to do this where you guys could follow through. But if you got your loan before the cutoff date, you could do the 8 weeks, or we can opt to do the 12 weeks. Well, actually, it's 24 weeks. But if you're a sole proprietor, an owner, self-employed, the maximum that you can do is 12 weeks. So what you do is you take 50,000, we divide that by 12 months, multiply it times 2.5, and now as a sole proprietor, you can now get rid of $10,416.67. Now, I don't know if you caught that. When we did the PPP loan, 50,000 divided by 12 times 2.5 gave us $10,400. That's what our loan was. Well, under this new rule, we can now take the 50,000 and do the exact same calculation. So that means it will all be forgiven. And that is fantastic, fantastic news. There's also, well, actually, let me stop. I want to talk about that for a second. The problem is, though, is documentation. So I think they're going to just let us make it go away. However, if you have a relationship with your banker, I've been saying this all along, talk to your banker. See what they want to see to make their records so that they're comfortable with it. You may need to cut yourself checks to show that whole amount getting paid out to you. It shouldn't be in payroll, but maybe you can say PPP loan, PPP wage payment to owner or something like that. So make sure you talk to your banker, because you want to make sure that it's easy for him so he can basically just rubber stamp this thing and make it go away. But on top of that, we can also use mortgage interest if it's normally deductible on your Schedule C. So your house mortgage is not deductible on your Schedule C, although I think you could probably use the amount that is the home office expense. I think the home office mortgage interest would be allowed. Rent expense, same thing. Utilities, same thing. But the question is, once again, how do we prove that? I think we're going to have to prove those by the checks that we've paid, and then use our home office calculation from last year's tax return and shows here's the ratios, here's the amount that I used. But really, I don't think that's going to come into play because of what we just covered a minute ago. But probably need to write yourself checks just to make sure, but talk to your banker. He's the one that's got to forgive it anyway. So I think we beat that to death, but hopefully that really takes a lot of stress off, because we were worried about that. I know I was, some people weren't, but it said payroll costs. They've now opened the door for the banks to make this an easy forgiveness. And so that's huge. But there's one other part there. If you had qualified sick leave equivalents, if you had to do any of that, go talk to your advisor. Make sure you got this right, because that does have to get backed out of the calculation. And I also want to talk about that for S-Corps. So I've had a lot of people who are S-Corp owners, and we were limited to 15,000 or 850 seconds. And we've had that discussion with a lot of our clients. Well, they've now opened that up for us, and the S-Corp owner is also able to take 2.5 times divided by 12. So in other words, 2.5 months of payroll. An S-Corp owner can now take that up to a maximum of $20,833. But we're going to have to take last year's payroll, our gross wages, divide that by 12, and multiply times 2.5. And that's the amount that we can pay ourselves as owners of our businesses. And I'm sure most of you watching this probably are owners, although I know some of you aren't, and you're great employees probably. So that's awesome that you're looking out for your boss on all this. But that's a big break for a lot of us, and I want you to know there is that bump now that went from 15 to 20, or it, depends on how much you made last year. Do it that way. Now, What about the application? The application has had some changes, and we covered the application in a previous video, so I'm not going to go through the whole application. I just want to cover a couple highlights. One is there's a brand new, well, actually there's two new applications, but one is an EZ form, or a 3508 EZ. And what's neat about this one is if you maintain the same payroll and you haven't made any cuts to wages, no cuts to your full-time equivalents, you're able to use the EZ form, and that's going to make the calculation a little easier for you. So that's a new form I want you to know about. They also released the other form. And in the next week or two, once this all settles down and we actually know that these applications are going to stick the way they are, we'll go ahead and make a video. So once again, stay tuned. We'll cover that. But for now, I want you to understand that one, the 75% on the application has now been changed to 60%. So they got that updated on the application, and that's good. The owners are now moved to 2.5 months worth of 2019 compensation, and we covered that, and that's on the application. The loan, though, when I said this last week, the loan has now been allowed to go out to 5 years, but only if you and your banker agreed to go to 5 years, or you did it after, I believe it was June 5th. So those of you just got the loan, yours is automatically going to be out to 5 years. But if you got it before that cutoff date, I don't know many bankers who are going to say, hey, let's give you 5 years. I love this loan because I'm not making any money. Not likely to happen. So the truth is, if you got it before then, it's going to be 2 years. Not many bankers are going to give you 5. Why would they want to unless something else comes up? But if we do this right, I don't think that's going to matter. You're going to get to write the whole thing off anyway. And that brings me to really my last point. Documentation. I've said it over and over and over. Documentation. Don't take this lightly. Don't get lazy. Say, oh, 24 weeks, or oh, it's going to be easy now because I can take 2.5 times instead of the 850 seconds. And then when it's time to go submit the application, you have no records. And they're going to come crying to me, and you're going to say, Doug, please fix it. I didn't do what you said. And then I'm going to have to charge you more money. So, documentation. And if that's not your bag, if that's not the way you do things, get some help. Get an accountant, get your, I don't care if it's your mother-in-law, get somebody to help you. Make sure you have the paperwork, because if you don't, it doesn't matter what the rules are, unless they change some more things, you're still gonna have to pay all of it back because you didn't do it right. So don't take this lightly. Do the records, get some help if you need it. But that's it, guys. Great news, a lot of good stuff here. Subscribe, I'll keep you up to date because I promise this isn't going to be the last change. And we'll go forward. So have a great evening. Hopefully you guys have a wonderful weekend, and we'll be talking again soon, I'm sure.